we are known through dividend yield is that companies which only have very high cash flow can consistently pay dividend. So dividend is in the form of a cash credit given to you as a reward for holding, for trusting the company. And government companies are well known to pay hefty dividends. Do not expect a massive rise in the price in the government companies, but they are very safe bet. So neither you would lose big nor you would win big, but slowly and steadily you will be able to gain out of dividends. However, metal companies owned by government like NMDC, during the last two phases of the market, you can definitely invest. Companies like BHEL, companies like NMDC, companies like REC should only be invested in the last two phases of the market. Never ever remain invested in any of the government companies in the pessimism and skepticism phase. You will lose money badly. First of all, there is no sector support, and government companies only perform in the stage of extreme optimism. So those 10 to 12 years they will be sleeping like Kumbhakarna. Whatever the price that you find, even after 10 years you will find the same price. You may gain through dividends, but what is the point? We have to gain through stock price rise also. So at this point of time, yes, we can invest. Which companies? REC, NMDC, both these companies I've recommended here. So I've even mentioned the share price so that after year 2 3 years you will be able to compare at what price have I recommended, what did you make, how much percentage of return you have got, what is the dividend yield you have got compared to the market, what is the excess return that you have got. Rather than scanning every company and finding out what is the dividend yield, I have directly given you a URL. So here what is more important is check the consistency. Are the stocks from the favorable sector? First point. So metals, yes. Banks, yes. Pharma, no. IT, no. Even though they come in this list, we will be avoiding FMCG, pharma and IT, because they perform in other phases of the market, not in these last two phases. So we should be remaining invested only in the old economy stocks with high dividend yield and the price is already in discount. And there is consistency in dividend. So among the list, these two companies are found to be very much favorable. So those who are planning to break their fixed deposit and invest, those who do not want to worry about the huge volatility in the market, I would suggest them to buy these stocks. Your household savings and all, wherein you would require some funds for your day-to-day expenditure. Okay, just hold on. Sorry for the interruption. So these are the two companies wherein you can even pledge your shares, wherein you can even break your fixed deposit and invest from 3 to 4 years perspective. So it's likely that you will double the money and you will be able to make something extra out of the dividends. Alright, now coming to the next topic, buyback. Very interesting. Very few people take the advantage of buyback. I do not understand why, but this is a very safe way to make little bit of income in short term trading. Your holding here would be only for 1 month, 2 months, 3 months, and returns would be like 5%, 7%, 10%, irrespective of the market. That is important. So take the advantage of the buyback opportunities which you get time to time. But what exactly is buyback? Right on. When a company generates huge cash flow, it either pays. In open market, company purchases shares directly from the exchange, while in tender, the deal is done offline where the investors fill the form to surrender the shares. Please note, not all the shares are bought. Quickly note it down. Alright, coming to buybacks. Better than dividend. I like buyback even better than dividends. What exactly is a buyback? So, whenever a company is generating huge cash flow, let's talk about Infosys. Every second year it comes with a buyback. So, it is generating 20,000 crore per year. In this 20,000 crore, he is using 10,000 crore to expand his business into different countries and within India also. Even 10 buildings he can expand with 10,000 crore easily. So, what to do with the remaining 10,000 crore? 2,000 crore he will distribute in dividend. Rest 8,000 crore he will come up with an offer of buyback. So, in this buyback, what will happen is every investor, big investor, small investor, the company promoters, everyone would participate and they would be tendering the shares. That means company will be using its own company's account to buy the shares at a premium price, and they will burn those shares. They are going to burn the shares. So what will happen? Let's say that you have 100 shares, I have some 200 shares. So some percentage will be decided, 10% buyback. So you will be able to sell 10 shares, I'll be able to sell 20 shares. If the price is, let's say, 1500, company would be purchasing at 1800. So we are getting a 300 rupees advantage, a better sell price. And the money will be paid from the company's account to our bank account directly. So in that way, it is very safe. Buybacks only happen in premium price. It doesn't happen in discount. Now, what is the advantage? There are two advantages with it. One is companies fixed deposit, they would have got only 5-6%. They don't know what to do with the cash. That's why they are coming up with a buyback. So when they are buying the shares and they are burning it, automatically the number of shares under circulation will reduce. Remember the point I told you? Anything which has got less supply, the price is likely to shoot up. So because of less supply of shares, as company has burnt 1, 2, 3% of the shares available in the free market, then the supply would reduce. That will be beneficial. That will be like a tailwind for the share price to rise. Second advantage is it will improve the fundamental ratios. Remember EPS, earning per share. We had seen an example of ACL Manufacturing Limited. How he increased profit by increasing the number of shares by 4-5 times by issuing the shares to his family members. Exactly opposite is buyback. The EPS will increase. Why? Because number of shares is reducing. What is EPS? Earning per share. Your earnings are going to remain the same. Your net profit will continue to be 20,000 crore, but divided by the number of shares have reduced from the previous quarter. So it improves EPS, then it improves the return on equity, return on asset. How? Because 10,000 crore cash assets is now used for the buyback. So company asset value has reduced, but net profit is same. So net profit by total assets is what your ROA is. So ROA will improve, ROE will improve, EPS will improve. So that company will become more attractive. At the same time, you are able to sell the shares at a premium price. A lot of people fail to understand this point. You cannot sell all the shares. Company will say that we are only going to purchase 1%, 2%, 3%, 5%, 10%, 20% of the shares. They are not going to purchase all your shares. Has any company purchased that? Yes, there have been some cases where company has purchased entire 100% shares. But that happens once in 2-3 years. That is a kind of jackpot thing. Sure short income. But that news you must know in advance. Because the day company announces that I am coming with a buyback with 100% shares, the price will already go to the buyback price. Then there is nothing to be made. So you should be knowing the news in advance. Only then you can take the advantage of 100% buyback, which happens 4 to 5 times in a decade. Last time it was SR Steel, I remember. Then it was Union Plastics. That's some of the companies which I remember which has come up with an 100% buyback are these type of companies. Now let's have a look at an example. Then it will be more clear. So the best site to know where buybacks are happening is buyback. There's a site called as Investor Zone Buyback. This is the one. So you can note down this URL, very important. At least once in a week you have to visit here, guys. Every month you'll find some of the other company coming up with a buyback offer. I told you this is one good opportunity for short-term trading. So first thing is the record date. the shares have to be present in the record date, and I told you if your name has to come in the record dates of the company, you have to buy it at least 3-4 working days before, or at least 1 week before, because from your broker the details have to go to the company. This may take 3 working days, maximum is 3 working days, it happens even in 2 working days, but to be on the safe side, purchase at least 3-4 working days before. Then only you will be eligible for buyback, otherwise you will not get the offer letter at all. So note down this important point. Now we are going to take an example and know exactly how many shares would a company buy if I would want to participate in the buyback. So Triveni Turbines buyback price is 350. It's a tender offer. There are two types of buyback, tender and open market. Never ever participate in the open market buyback. These are just absolutely flop. Only participate in the tender buyback offer. What is the difference? In open market buyback, company, just like how you are purchasing shares in your demat account, like that company will have its own demat account, and through that it will purchase its own shares. That means when the stock market is open, you will not even know when the company is buying. So we are not benefited. Company is not buying our shares. Company may be buying some public shares which are there in the stock market, which is under trading. So we do not get any benefit with the open market buyback. Always go with tender. In tender, the deal is done offline. So shares will be purchased from your demat account without the market interference. So company is giving an equality treatment everywhere. So it's buying equal percentage of shares from the entire public. But in open market, we don't know whose shares it is buying. It is buying it from the market. It may be yours, it may be someone else's. So you want an equal treatment to everybody, then tender offer is the one that we have to look for. So here, majority of the time it will be tender offer only, but rare cases you will find open market, ignore it. Open market buyback, just ignore. So record date here is 4th November, which is already gone. Dhanush Agritech is going to buy at 850 rupees. So this announcement came on 1st November. Board meeting date means all the management members in the boardroom, they'll come up with an solution that, see, we have lot of cash left in the bank, we don't know what to do, what to be done. So everyone will give their opinion, and finally voting will be taken, and this management guys, 15-20 members guys in the boardroom, they'll decide that let us come up with a buyback. Then they'll decide the price. So all this happens on the board meeting date. Then they'll decide with the record date. On 18th November, who's your name that I find in my company's register, to them only I will be sending the offer letters. And for this, your name to come here, you very well know what you have to do. Before 13th of November, you will have to purchase the shares of Dhanuka Agritech. But let us first see how lucrative is this buyback offer. How many shares is it going to buy? If it is buying only one share out of 100, no point. Even if he is buying at 200 rupees premium price, buying only one share, 99 shares, what will I do? So percentage of shares buyback for retail category should be high. This is one thing that we want. Second is the premium should also be high. Let us first see what is the price of Dhanuka. $730 and is buying at 850. So that is a very good premium, 120 rupees profit per share. Sure shot, let market go to hell. Okay, but how many shares? That we'll see now. So if you click here, you'll get the entire details of the buyback. Firstly, is explaining what this company is about. Buyback offer size is only 2.15%, guys. That's very less. That is very less. So only 2.15% means out of 100 shares, company would purchase only 2 shares. So this figure has to be at least 15%, 20%. Then it would make sense. Because even if it is 15% here, for retail category, maximum shares will be observed. In buyback, it is not that the same percentage of shares will be purchased from everyone. There are three classes of investors. Retail, whose holding value is less than 2 lakh. They are called as retail. According to the SEBI rules, company has to support maximum to retail. So though it is 2% here, 2% may be for big investors. But for small investors, it could be 10%. I'll tell you what exactly is the percentage. So for small investor means anybody whose holding value of the company is less than 2 lakh is called as retail investor, small investors like you and me. So for us, we will be able to sell more shares, not just 2%. But how many more? Is it 3%? Is it 5%? Or is it 10%? That we will calculate now. So here it is clearly mentioned about the working of the company, how to participate and all that. So nowadays, in a demat account like IIFL, you don't have to even fill a form. There will be directly an option buyback and you can sell from there itself. So that automatically fills the form and submits it to the company. But that will come on 18th of November. Post 18th of November, a pop-up window will open up. If you are having the shares of this company, you will find there itself sell to company. You can sell it at 850 rupees. Now, here the number of shares is not shown. Also read these comments, this is very important. See here, checked in detail comparison from the entire Dhanuka is very well poised equity with government of Singapore, LIC, another good mutual fund. Retailers was 8.5% in 2018 December, which is now reduced to 6.63. So the number of investors in retail category is only 6.63%. Okay, this is one figure we have got. Let us take the exact figures. We want to know how many shares is company going to purchase. 10 lakh. So write down. Example, Dhanuka current market price is 730, is coming up with a buyback at rupees. Let us see. Total number of shares company would buy is 10 lakh, but this 10 lakh is not uniform. From retailer, there will be 1%. For big investors, 1%. And then for promoters, for insurance companies, for mutual funds, for institutional investors, they are called as institutional investors. For them, there will be one quota. So we are only bothered about the retail quota because that is what is our category. So in this 10 lakh, how much belongs to the retail quota? First I write down retail quota. So now we would want to know how many retail investors are there and what is the percentage of shares from retail quota that will be taken by the company. For this, we have to first find out what is the percentage allocated for retail. In this 10 lakh, is it 1 lakh, 2 lakh, 1.5 lakh, or is it 3.5 lakh? From retail category, how many shares would we purchase? For that, I just have to type this question here. Here, retail shareholding. How many shares are there with the retail investors? 30 lakh 87,000. Buyback retail quota is 15%. Very important information, guys. Okay. So how many shares with the retailer? 30 lakh 87. So right down. Hope you are getting the point here. See, there be no confusion, because if you miscalculate it, then maybe you would apply it for a buyback where you may not be getting good returns. How this 1.5 lakh shares have come? 15% of 10 lakh shares which the company is going to buy. Okay. So it means that how many percentage of shares? 1.5 divided by 30, which is 5%. So from retailers, only 5% shares will be taken by the company. So let us calculate the return. We buy 100 shares at 730 rupees. Let's say that today I buy Dhanuka 100 shares at 730 rupees. And then post buyback, I would be able to sell 15 shares at 850 rupees. So the net profit through buyback would be, let us calculate now. ₹730 is the current market price. If I buy 100 shares at 730, my investment would be 70 3,000 rupees. Then after 18th November, when my name goes into the books of the company, I'll be getting this pop-up window to sell my shares. So I will be able to sell how many shares? Only not 15, 5 shares only, right? Only 5%. So 5 into 850. 5 into 850. This is the money what I'll be getting in the bank account. Okay, this is the money that I'll be getting in bank account if I sell 5 shares. Automatically the price would be 850. It will not be 1 rupee less, it will not be 1 rupee higher. And then what is left over with me? 95 shares. Assuming the price remains the same, 69,350 is a holding value, plus how much did I get? 4250. So 73,600. My investment was 73,000, which has now become 73,600, which implies a net profit of 600 rupees. Assuming the price remains same, it may increase, it may reduce also. But we are taking a virtual example that the price remains the same, then what is the benefit that I would get? If the price rises, well and good, that is a bonus. But if things remain as it is, then my profit would be rupees 4250 would get in the bank account, plus 6 is the holding value for 95 shares. The net profit through buyback would be 600 rupees for 73,000 rupees investment. How many days? Approximately 15 days. So how much in percentage terms? So it is a net return of 600 divided by 73. Eight point 0.8%. So it's a net return of 0.8%. So this is what you will be able to make in the buyback end of 1%, 2%, 3%, 4%. This is not a great buyback because company is only purchasing 2% shares. So the returns would also be very much limited. We want lot of shares of retailers to be absorbed. For that you'll have to apply for the buyback where the percentage of shares in buyback is high. Let's see other buyback offers. Tender offer only. Triveni turbines. This is even more lesser, only 1.68%. Garware Technical. This is even more less, 1.16% only. GAIL had taken 8% shares in buyback. This is 2.33%. Either there should be very less number of shares in the retail quota, then we can expect a good percentage of buyback. Here, not yet announced. Buyback offer amount 250 crore. Number of, okay, 62 lakh, but percentage is not shown here. We'll have to calculate manually. Here also it's not shown. only 1%. But don't directly surrender stating that is only 1 2%. Also find out how many retail investors are having it. If the number of retail investors in the company is less than 1%, then 20% of your shares would be taken by the company, even with 1% buyback. Okay, so always check the retail holding, don't check just this percentage. See, all these are tender offers. Excellent. Oh, amazing. This is what we want, guys. This is what we need. 25%. You can expect at least half of the shares of the retail category to get absorbed. So that was your Birla Soft. So that's already over story now. That buyback process all already finished. But like this opportunity when you get it, so he purchased it at 500 per equity share. Generally, this kind of news will be very supportive to the share price. Very rarely you'll find once in a year a buyback with 50% absorption of shares. So price that time when this company had announced buyback in August was 340. Amazing. A missed opportunity. So half of the shares you would be able to sell at 50% premium. Half of the shares. The remaining half, even if you sell it for 10% discount, you would have still gained a lot. No percentage mentioned. This is also good. 8% K rating. That's a good figure. 80% of the companies you will find less than 3% in buyback. But anything beyond 5%, you'll have to go deeply and find out what is the shareholding of retail, what exactly you would make. Quick Heal, 8.6%. This is also excellent. Zydus, no mention of percentage. Matrimony.com, 24.5%. Again, amazing. Okay, such kind of buyback you should definitely participate. Sada Energy, 6%. Explore what is the retail quota, how much shares are there in the retail quota, and then accordingly apply. 1.28% GAIL. In the previous buyback, GAIL had absorbed 11% shares. 85%. See, this is what we want. Like this opportunity comes once in 2 years. There will be 100% also many a times. So this kind of buyback opportunities is like a sure shot income. But then most of the time before this date only, when the company is announcing buyback itself, you may see that the share price would have risen. But even if it has risen little bit compared to the buyback price, you can still participate. Company price would be 400. Even if it becomes 450, you can still buy. Even if it becomes 500, we can buy. 550, 560 also we can buy, because the price is 600. But it's already coming to 570, 580, 590, then you can avoid. TCS, Cheviot, 4%. Okay, whatsoever. This is where you'll be able to find the buyback offers. So hope it is clear how buyback would benefit any investor. So write down a note here. Alright, so hope this is clear. Now coming up with the IPOs. So both buyback and IPO are offline market dealing. That means you do not want the market may not have to be opened for buyback and for IPO. You are dealing outside the market. IPO, initial public offering. When a company wants to debut in the stock market, it comes up with an IPO offer. During this, new shares are issued to the public. But quickly note down. Alright, so this is the best site in order to know anything about the IPO, chittodgarh.com. And now I'll tell you which all IPO offers you need to subscribe for. These are all the IPOs which have happened recently and which are going to open and which are currently open. See here, DCS Systems IPO opened on 31st October, got closed on 2nd November. Tomorrow is the listing for DCX Systems. So after the closing date, within 10 days, the company share price will get listed in the exchange, and from there on, you can sell your shares in case you have got the allotment. So whichever IPOs are currently open, like this IPO got over, now these IPOs are going to open from tomorrow. 5 Star Business, Finance, Archean Chemical, KNS Technology, Inox Green Energy, Uniparts India is not yet announced the date, but is very soon going to come. These are small and medium scale enterprises, nothing but micro cap stocks. This is little risky, so avoid this. But here also 80% companies are to be avoided. There are only 20% companies which are really good to be applied for IPO, because most of the time these companies will come up with a very high price to give the shares to the public. We do not want to apply there. We would rather want to apply for the IPOs where the price is reasonably put. So if the company is worth 2000 rupees, the IPO should be at 1500. Such kind of companies we want where the pricing is in discount. Now here, which company is good or which is bad, at what price it is giving, let's have a look first. So let's say this all IPOs are over, none of the IPOs are open today. Anyway, let's have a look at, say, Inox Green Energy. All the details of the company is shown here. What are the strength, what is the weakness, how the company has performed, then how many shares is it going to issue, what is the price band. This is important for us. While you are applying for the shares, I'll tell you how to apply. Okay. While you are applying for the shares, apply only for one lot, and the value would be approximately 15,000. So these shares have to be bought in lot. You cannot buy in non-discretionary values. So here, what is the lot size? 230 shares. So either you have to buy 230, or you have to apply for 460 shares, or you have to apply for 690 shares. Likewise, you cannot apply for 220. You cannot apply for 250. Only in multiple of lot size. And price band will be shown as 61 to 65. Always apply in the highest price of the price band. Why? If you apply for lesser price and your friend is applying for a higher price, he will get the shares, you won't get. So anybody is looking for allotment, they would be applying for the highest price only. So automatically you will see that any IPO that you are applying, the lot size will vary according to the price. The value will come to approximately 15,000. So per demat account, per PAN card, only one company you can apply once. This point also has to be taken. Per PAN, only one application is allowed. If you fill two, then both will get rejected. You may be having Demat account in IIFL, you may be having in Zerodha. Any one you should apply, not both. And when you are applying, the money should be there in your bank account. So whatever the bank account you are using for net banking or for UPI ID, the PAN number there should match with the PAN number in the Demat account. These are all the conditions necessary for successful application. Otherwise, your application will get rejected. The money is only blocked, not debited. If you get allotment, that money will get debited from the bank account. If you do not get allotment, the money will get unblocked, which is called as revoked. So you may be having a balance of 20,000. Post you apply IPO, the balance will be shown as 20,000 only. But only 5,000 you'll be able to transfer. In case you want to withdraw, only 5,000 you'll be able to withdraw. 15,000 is in block mode. After the IPO date is over, within 3-4 days, you will get to know whether you got allotment or not. What are the chances of allotment? That also we will see. But in case you have got allotment, then only that 15,000 will get debited. If you do not get allotment, that balance will become again free with 20,000. Then you can withdraw the entire 20,000. You can transfer to others. You can do payments or anything. After it is revoked. So for 4-5 days, the money remains blocked. In case you have got allotment, then after approximately 10 days, when the company gets listed, if it is a good company, it will get listed at a premium price. There is no limit on the price on the debut day. It may even become double. DMart price got double, like that Clean Life Sciences price got double. So many good companies had listed at double the price. So your 15,000 investment within 10 days may become 30,000 rupees. So IPO are an excellent opportunity provided you have little luck, because only if for the good companies, out of 20 people one will get allotment, out of 20, out of 30 one will get. That is why my advice would be to open Demat account with each of your family members. At least for IPO, open the account. Account opening is free. I just need your email ID and mobile number. In 5 minutes your account will get ready in IIFL. Only email ID and mobile number, you ping me on WhatsApp and your account would be ready. You can upload documents directly through the app itself. So today that any IPO has come, today itself you'll be able to apply that fast. So these Demat accounts, use it only for IPO. So then what will happen? 15,000 into even let's say 6 application, 1 lakh. Till you have 1 lakh, you'll be able to apply with 6 accounts. Then maybe every month at least one or the other company will keep on giving you allotment. And 2-3 good companies you get in a year, it will not take much time to double or triple your money within a year. Your 15,000 can become 50,000 within a year. Let market go anywhere. Here it is just a short term trading for 10 days. That's all. On the day of listing, we can sell our shares. Then that amount we can use it for another company for IPO. Now let us see More details about the IPO. The recent IPO which went through, how many times it got subscribed, like say Bikaji Food. First of all, here you have the grey market premium. What is grey market premium? Grey market premium will tell you roughly at what price the company may get listed. It is only 50% accurate. It may or may not be true. It is just like saying exit polls, opinion polls, exit polls in elections. Likewise is the grey market premium for IPO. So when you have a look at the grey market premium of Bikaji, it is 338 rupees is the expected price on listing, which is 12% premium. Likewise for Fusion Microfinance, it is only 0.8% premium. So there is no point in applying for such kind of IPOs where the premium is very less. However, if the fundamentals of the companies are good through your own research, then you may take a chance. Alright. So here, this company, this is an SME, we'll ignore this. The other 4 companies which are going to come, within that, Archean Chemical is at 15% premium. Apply only for IPO where the premium is minimum 50%. Then you can take a chance. So when the premium is 50% only, we should be able to apply for an IPO. And second condition, let me tell you, I'll make this process as simple as possible for you. Every month you'll find some 8 to 10 companies coming up with an IPO. Which one you have to apply? Do not apply your brain. Do not look at into the fundamentals of the company. Only one person you need to follow for this, and that is Dilip Davda. The person who is expert in IPO, who has got more than 40 years experience, is giving his recommendation which company you have to apply, which you shouldn't apply. 90% companies, this guy rejects it. Only when he's sure shot, yeah, this company looks to be very good, it is in deep discount, then only he will tell you to subscribe. So just follow Dilip Davda when it comes to IPO. He tells to subscribe, you don't have to even ask me, you have to tell me, sir, please subscribe for this IPO because Dilip Davda is saying it. I will not ask any other question but directly apply. I've been following this guy since 8 years. 99% success ratio. If he has told 100 companies IPO to be applied, that 99 of them have given blockbuster returns even after holding, not selling on the listing date, hold it and forget it. You would have multiplied your money. So for IPO, only one thing, read the review of Dilip Davda. But where is Dilip Davda? Here itself. So everyone will be giving their own view. We are not interested in others' view. We only want the view by him. Reviews. Not showing here Dilip Davda review. And here you can see the subscription also. First let us see the subscription. Retail category got subscribed by 4.77 times. Big investors category got subscribed by 80 times. This will always be higher. It will be at least 10 times, 20 times, 30 times higher than retail category. Non-institutional buyers 7 times. Bids above 10 lakh 7 times. Bids below 10 lakh 6 times. Retail investors whose value is less than 2 lakh or who are applying mostly with one lot 15,000 is 4.77 times. It means that out of 5 people who are applying for IPO, one will get the allotment. So with a family of 5 members, when you are applying it, you can expect one allotment according to the ratio here. Now the review part is, it shows here itself, review by various investors. Within that you'll be finding Dilip Davda. So brokers, 20 brokers, they are positive about it. Two of them are neutral. No one is telling to avoid in the brokers category. Okay. Members, 6 members have told to apply. Members means the members of Chittorgarh, expert like Dilip Davda. One of them is neutral. Three of them is telling to avoid. I don't believe in brokers. I believe in because brokers want business. Believe in the members, and even in members, only one person that I always admire, have been admiring, and will continue to admire is Dilip Davda. So when you click here, he will be giving his view. Company gives his view, and this is entirely written by Dilip Davda only. Why he feels that we have to apply or we shouldn't apply. If you have time, read all of it. You don't have time, don't need to read. Just read this last conclusion part. That's all. So what is he saying here? BFIL, Bikaji Foods India Limited, one of the largest organized namkeen snacks and sweets manufacturing market, has posted decline margins in FY on the higher sales in line with the greater trends of the industry. Sustainability of such margins going forward, stiff competition raised concerns based on its FY23 annualized earnings. The issue is aggressively priced. Well-informed cash surplus may consider parking funds in the issue. So he's not confidently saying to apply. I told you now, even if he finds little bit of riskiness, he will tell you to avoid. Here he will give a stamp called as subscribe. When you are free, so this is your homework. What are you going to do in the homework? You can already see how many IPOs have gone past by in Chittorgarh.com itself. Where is the site? Within this site, you will see all the issues which have gone past and what are the issues going to come, forthcoming issues. I want you to do from Jan 1, 2022, what all IPOs Dilip Davda has said to apply with subscribe stamp. There will be a stamp of subscribe. If you go through, you'll get to know what was the IPO price and what is the price today. This is the homework that you'll have to do in the Excel sheet. I think maybe some 8 to 10 only IPOs that he would have recommended to apply. So only for that, wherever he has recommended to apply to subscribe, those only, company name, what date the IPO got launched, what did Dilip Davda say, and what was the IPO price, what is the price today, what is the percentage gain on loss. That's what in the last column, which is important for us. So this is a task that you have to do it before tomorrow's class. Let's see who does it well. You can post your Excel sheets in my WhatsApp group. By that it will be clear how expert this guy is. And let me tell you, during this phase, market hasn't been good. The IPOs did not perform well, but let us still see in tough time how he performs. That's all for today, guys. Any questions or doubts, you are now free to choose the mic control or the chat window.